Welcome back to Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. Joining me at MarketSite is Matz. He's the president and CIO of SpiderRock Advisors, and we're going to focus on the growing adoption of options for the financial advisor. Thanks so much for joining us at MarketSite today.
Appreciate it.
Eric, let's talk about that, the growing demand for options by financial advisors. Are you seeing them incorporate it more into their planning?
Yes, I think the biggest thing in the space recently is just kind of the equity market and kind of given its recent run. A lot of their portfolios have drifted into a stance in which they're overweight equities. So using options, listed options around indices, around single stocks to reduce risk in a prudent manner, given I would say, some egregious performance in certain sectors and certain names has seen an uptick this year for sure.
Let's talk about the volatility outlook for 2018 because it seems as if there was expectations for higher vol in the beginning of the year, and it certainly has declined to levels that we saw in 2017. Do you think that's going to continue to be the path, or do you expect it to rise going into midterm elections and into Q4?
Yeah, I think the uptick in 2018 really exacerbated in February and has kind of simmered down since. But 2017 was an anomaly in terms of having such a low vol regime. Markets are, tend to be between the 16 and 20 volatility range, and so I don't think anything this year, absent the one large move in February, has been egregious by any metric. So I think we're returning to a more normal state. And if your barometer is a 2017 type year, then you're starting at a very low base.
Right. All right. Now let's talk about SpiderRock Advisors. What do you guys do over there?
Sure. So enabling the financial advisor to really use options for their clients, risk management. Really striving on achieving risk-adjusted returns or superior risk-adjusted returns. Options are a very useful tool in doing so. So empowering them with the use of our strategies and our team and our portfolio management team to take all that work off, help shape what strategies they should be performing, manage those strategies, and then report and give attribution to them so that they can easily communicate that to their client. Because the number one thing that financial advisors don't want to do is take on the liability or have the time to actually perform these sometimes complicated strategies. So we take that work off of their plate.
So what is some feedback you're getting from clients?
I think this year has been, I would say, the litmus test as to really the merit of all of risk management, right? So when you don't see volatility, when markets kind of drift up, the need or the desire to hedge or protect portfolios kind of gets forgotten about. And so when you actually realize the true merit of protecting a portfolio in events a la February of 2018, then it really kind of focuses and shines a light on the merits of the strategy.
What are some of the strategies they're asking about around earnings season, since we're kind of at the tail end of it now? It's been an incredibly busy couple of weeks for that.
Well, it's really sector driven right now. We were just speaking this morning with some clients around the performance of the technology sector. When Apple is out today with really strong earnings. So, the appreciated gains in and around a lot of sectors and a lot of really the broad-based market. Protecting portfolios in and around idiosyncratic events like earnings, is often something that we'll work with our clients to shape that risk. But largely speaking, the markets keep performing relatively well, and certain strategies perform in certain environments and vice versa in others. So it's kind of a mixed bag.
All right. Well, thank you very much for joining us at MarketSite, and thank you for joining me. I'm Jill Malandrino, global markets reporter at Nasdaq.